Americans getting $2,000 in tariff dividend checks, 50-year mortgages, and portable mortgages. Let's talk about it.
Trump gives update on when $2,000 tariff dividend checks could go out. President Trump says his proposed $2,000 tariff dividend checks are coming, but not this year. Speaking to reporters on Air Force One, he said the payments are now planned for 2026 during the midterm election cycle. The idea is to use money collected from Trump's IEEPA tariffs, which have brought in about $90 billion so far. But there's a major problem. The Supreme Court may strike those tariffs down after tough questioning in a recent hearing. When asked if he'd still send checks if the court kills the tariffs, Trump said he'd have to do something else. There are other hurdles too. The plan needs congressional approval, and some Republicans say Trump should focus on cutting the federal deficit instead. Treasury Secretary Scott Bessent said families earning under $100,000 are being considered, but nothing is final. If the income limit is set at $100K, the program could cost around $300 billion. For now, Americans will have to wait with no exact date for when, or even if, the $2,000 checks will be sent out.
Interesting. I don't know about you, but I know an extra $2,000 would be nice right now. But the problem is, at least according to these numbers, we're still about $210 billion short of being able to fund a $2,000 per household dividend check. Now, there are two viewpoints on this. As you can see, at least for the Republican household, you have the side of where mostly Trump's at. He's saying, send the money out, give the people the $2,000 checks. Then you have the other side of the Republican House who's basically saying we need to cut down the deficit. Now, something else to think about is if we look at Trump's side of things and we think, okay, let's pump an extra $300 billion into the economy right now, where inflation may continue to keep rising as we're seeing maybe in the near future, that extra $300 billion being pumped into the economy is only going to, in my opinion, rapidly increase inflation or even help inflation increase even more. But also the $2,000 does sound nice to everyone who makes under $100,000. So let me know what you guys think.
Some experts say under a 50-year mortgage, you may pay less month to month, but would end up paying more overall. President Donald Trump is pushing a plan to create 50-year mortgages, hoping to encourage younger Americans to buy homes.
The average age of a first-time home buyer has gone up by about 10 years in just a few years, and it's something that we're very serious about addressing.
The White House says with this approach, home buyers would see lower monthly mortgage payments.
Extending the length of mortgages can reduce monthly payments by hundreds of dollars.
But industry experts point out those borrowers would likely end up paying way more in interest over time.
The total amount of interest that you pay to the bank over the lifetime of that loan is nearly double that of a 30-year mortgage.
David Meyer is the head of real estate investing for Bigger Pockets, an online community of residential real estate investors. He says with a 50-year mortgage, it'll take longer to build equity, but could be an option for some home buyers.
I think it could be helpful for people who are sort of on the edge of being able to afford the type of home that they want.
But he does offer one suggestion.
You should consider refinancing as soon as possible to a 30-year or shorter mortgage.
The White House says it's still working out details of this plan. Administration officials say it's just one option of many they're exploring to help younger Americans buy homes. Reporting in Washington, I'm Trevor Shirley.
You heard that right, a 50-year mortgage, people. Now, I am a mortgage broker, so this hits me right at home. What are my opinions on it? Well, when I put my investor thinking cap on, I'm okay with it. And then what I would end up doing, as they just mentioned, I would probably refinance when rates dropped lower, or I would just tend to pay extra on the mortgage as time went on, so I wasn't really paying the full 50 years. Now, here's the problem with that. When I take my investor cap off and I put, the everyday American who's going to get a 50-year mortgage, the problem is how many people are truly going to be paying extra to get rid of their 50-year mortgage. That's the problem here. And as the guy mentioned, you're going to be paying almost double the amount of interest versus a 30-year loan. So there's like two scenarios here that I'm like, 50-year could be good for the investing side, but as a residential buyer, it may not be good. Now, there was a whole lot of noise on X, formerly known as Twitter, and there was one real pretty viral post I want to read to you guys. This guy, James Fishbeck, says, "The 50-year mortgage is a disgusting insult. We are Americans. We are not slaves. We are not slaves to the plantation owner. We are not slaves to China, and we're not slaves to Wall Street. This 50-year mortgage idea is a spit in the face, is an insult. We did not vote for this. We did not vote to become debt slaves to private equity firms, the big banks, and Wall Street. Right now, the median home in America costs $500,000. At the prevailing mortgage rate of 6%, you will have $580,000 of interest payments over 30 years. If we went with this ridiculous, insane idea of a 50-year mortgage, that would be $1.1 million of mortgage payments for a $500,000 home. You would end up paying $1.5 million for your $500,000 house. My grandfather was a World War II veteran. He always told me that we do not want to pass down this national debt to the next generation, to our kids and grandkids, and make them slaves to China. I am not worried about China anymore. I am worried about becoming slaves to Wall Street. And the do-nothing Republicans and know-nothing Democrats seem to be working together once again to push this usury on Americans. It is an absolute insult. If we want to get serious about housing affordability, the crisis staring down my generation, consider this. When my dad was growing up in the 1960s, half of the 30-year-olds were married and owned their homes. Today, only 15% of 30-year-olds are married and own a home. If you cannot own a home, you cannot get married. If you cannot get married, you cannot have kids. If you cannot have kids, then what is the point? This is an insult. This is an economic genocide against the Gen Z generation trying to foist this kind of slavery and usury on us. We reject it 100%. If we want to get serious about housing affordability, why not ban Blackstone, one of the largest donors to both parties, from buying up entire neighborhoods and forcing us to rent from them? If we are serious about housing, why not remove the 55 million people here on immigration visas who occupy homes that could go towards Americans who have worked, fought, and bled for this country? I am sick and tired of the do-nothing Republicans and the know-nothing Democrats being held in bed with Wall Street, forcing us to become debt slaves, forcing us to accept the unrestrained usury. We did not vote for the 50-year mortgage. If this continues, the Republicans will lose the midterms, and they will deserve to. Guys got a point. And then you hear this. A $400,000 house at 6% costs $863,000 on a 30-year mortgage. On Trump's 50-year plan, $1.38 million. That's $500,000 more in interest. Trump supporters cheering for 50-year mortgages is like turkeys cheering for Thanksgiving. And then this next one was my favorite. I had to include it. It says, boomers with 17 paid off properties watching you take your 50-year mortgage. And you got boomers dancing and looks like some Mexican resort having the best night of their lives. Spot on. I mean, I really like what that guy was saying. If we focus on not letting, companies like Blackstone come in and buy up billions of dollars worth of real estate, putting the regular everyday American out and having to rent those homes, I think that's case number one. I think that's probably one of the biggest factors with our housing market right now, is the fact that these large funds, these companies come in and literally are buying up billions of dollars of real estate. There needs to be some sort of regulation around that, because that is causing the unaffordability crisis here for Americans and for Gen Z guys. Gosh dang it. What a hard time to start life. I'm serious. Crazy. Now, if that wasn't enough, here's another piece of news that came out recently.
Finally, we may have a solution for the housing crisis that America has been in for at least 4 years, and it's all because of this guy. And no, I'm not talking about his plan for a 50-year mortgage. That's actually one of the worst possible solutions. But this one, the idea of portable mortgages, is the game changer for the housing market, and let me explain. Now, first, here's what a portable mortgage is. It allows a homeowner to transfer their existing mortgage, including the remaining interest rate and terms from their current home, to a new property when they move. This feature is most commonly used in countries like Canada and the UK, but is rare and generally unavailable for most conventional loans in the United States. So one of the problems that we face with the housing crisis right now is that the vast majority of homeowners that have mortgages have interest rates that are below 5%. And we know that interest rates across the board have been elevated since inflation's been going on. So anybody that has an interest rate that's lower than 5% is not in a hurry to jump to a new mortgage, because they know that they'll be getting rid of their old existing interest rate and jumping into a higher, more expensive interest rate. And so people choose to stay in their home and wait for the interest rates to come down before they're considering selling. And so the idea behind the portable mortgage is, if you're somebody who has a low interest rate and you want to move, but you've been hesitant to because you don't want to give up that interest rate, now you can just carry it with you over to a new house. So it actually incentivizes you to say, hey, we like this house, but we've been wanting a different house for a long time. Let's just move and we'll take our interest rate with us. And so this addresses one of the problems of the current housing crisis, which is let's get people comfortable enough to sell their house, pull the equity out of it, keep the interest rate, and move to a new house. Now more houses become available for more people. But keep in mind, it doesn't fix the entirety of the housing crisis problem, but this is really awesome if this works.
And there would be a lot of happy Americans who I know would be gladly to leave the current house that they're in and take their interest rate with them. I know for a fact they would, because I talk to them every single day. Now, the U.S. Director of Federal Housing came out and he posted this on X just a few days ago and said, we are actively evaluating portable mortgages, and everyone in the mortgage space went wild. Everyone was talking about it. Everyone was bringing it up. And so I wanted to talk about this today with all the other crazy news that's been coming out with, I mentioned, $2,000 dividend tariff checks. You have your 50-year mortgages and now a potential portable mortgage. Think about this. If you have I know some people have like under 2% interest rate for their mortgage. Think about how amazing that would be to be able to use that today and take that somewhere else to go upgrade the home you're living in and then potentially open up that home for another buyer here in the market. Now, what would that do to the housing market? I don't necessarily know yet. I'm not quite sure if this would truly help it or not. There's some, interesting thoughts here. Somebody said, imagine you're a millennial or Gen Z and you've just managed to scrape together enough cash and credit to qualify for a 7% mortgage. You go to an open house and there's 100 boomers there, all with their 3% portable mortgage. We're back to the boomers again. Sorry, boomers. So, you have that mindset and you have that thought process of like, okay, well, if we have more inventory coming to the market, we're also going to have a rush amount of new buyers who are looking to buy maybe their upgrade. They're living in a much smaller home and they're upgrading from like a $100,000 home to a $300,000 home. And you're fighting all these, portable mortgage people coming. I mean, it's wild. Now, none of this is official right now. This is just more noise coming out that's been, potential things that could happen in the very near future. Now, out of all three of these, which one do you like the best? Which one do you dislike the most? Let me know in the comment section, guys. And again, thank you all so much for watching. Until the next one. Oh, real quick, if you guys made it to this point, first, thank you very much. I appreciate that. If you haven't already, there's a large percentage of you guys that are returning viewers and you're not subscribed. If you could help me out, because it does help out the channel, all you got to do is hit the subscribe button down below. Thank you so much. If you're watching the videos anyways, help a brother out. Click the subscribe button. Have a great day.